Do you love the dollar? Do you love history? Do you love billionaires and millionaires? Do you love air balloons? Well, if the answer is yes, this episode is definitely for you. Welcome back to Coffee Infused Crypto. Today we're gonna discuss the Dollar Strength Index, the DXY, and how does it impact you as a person, and you as an investor, and you as an air balloon or hot balloon lover. So grab your cups of coffee, sit back, relax, and let's deep dive into the DXY. Disclaimer, we're gonna visit the Bitcoin chart at the end of the video, so stay tuned for that. But before we do that, we're gonna jump into the dollar index or the DXY, and this is on the monthly time frame. And the DXY is a metric or a strength indicator which measures the strength of the US dollar, the one that you hold, you have in your pocket right now, and you use it as a purchasing power. So as the DXY is high, then you have a higher purchasing power. As the DXY or the dollar strength index comes lower and lower, then your value or the value of the dollar bill that you hold in your pocket buys you less and less stuff. So this is on the monthly chart. So technically when we are going way back here, this is the it goes way back to the 68 era, where it started accumulating data in the 73 era. So this is each candle is a month. So if you recall, this is the peak of the DXY in history, hit a 165.365. okay, 164.9. okay, so around the 164.5 was the peak strength of the US dollar, and that was in February 1985. So back in the good old days of the 80s, you had less millionaires, like maybe in the thousands or hundreds of thousands millionaires, even less billionaires, like a handful, very rare people being billionaires, and definitely people could afford a lot of things with the dollar they hold in hand. So as we moved along the years, as we moved forward, the dollar, declined in value over and over and over and over again until we reached the current stage. So this is the history. I'm just flashing it right here. So being the worst the best was 1985. The worst was in the 2008, and we all remember what happened in the 2008 and the economic crisis of the 2008. And the 2008 came right after the peak of 2001, where we had a peak. Okay, so at the very early of the 2000s, we had the dot-com bubble, and then blast, and then the dollar just kept on going down all the way until we had the economical crash or the crisis in 2008, and we had 10 years of a very weak dollar. That's where we ended. So every time we see the cycle, right? So in 85 we started at the 164, and we went all the way down here, which was at 78, and that was in 92. So those cycles, if you notice, take a lot of time to happen. And from 92 we kept climbing. Of course, we go up, come back down, go up. Nothing is a straight line, but the worst was 92, and the best or the peak was in 2001. And 2002 started the downhill, and ever since we started the downhill, if you notice, we go a couple of months in red, then 1 month or two in green, then a couple of months in red, and that's how we descend the hill. And from 2002 till 2008, it was horrible, as in people could purchase less and less with the value of the dollar they had, and millionaires tend to just sprout on trees. Like, it's very easy becoming a millionaire. Why? Because money has no value now. in comparison to what value it had back in the 80s. Makes sense? Amazing. So, what happened later is that the dollar moved all the way up. If you notice, we had a peak in 2016 that was a slight peak and then came back down. Again, this is like a double top pattern, came back down in 2021, was the bottom of the cycle, just like we had the 92 bottom at this cycle. So in 2021, we had this rally, this peak, okay? So that was a rally just like the one we had here, or maybe the one we had here. Okay, so ever since we hit the peak at 113, 114, and we're gonna discuss how did that happen. This looks similar to this, maybe, or to this, or to this, or to this. So this has been a downtrend that we have seen before from a peak. And usually on a monthly basis, those take a couple of years to form. So the lower the more we progress, the lower we are bound to go, maybe. But this looks a peak just like this, just like this. So what has been happening recently, and how in recent times was the dollar or impacted, or how did it move from this stage in 2021 all the way to this stage? So remember the hot air balloons? Now we're at the hot air balloons area. So first, those are starting 2022, all of the rate hikes that we have seen so far. And of course, me being me, I have plotted those on chart just to see. And I was curious to find or to see the impact of whenever we started, or the US government started to raise the rate hikes, the federal government. So, the impact on the price from when they started to the recent impacts on the price or the dollar's strength when they declare a rate hike. So those are in all of them, March 17, May 5, June 16, and so on and forth. And 25, 50, 75, 75, 75, bunch of 75s, bunch of 0.5, 0.25, 0.25, 0.25 was today's hike. So, of course, we can move this out of the way. And yeah, there they are. But before, look at this. So this is just like this person inside this hot air balloon, where he had propane propelled into outer space, right? So we're imagining the scenario, and mid-air propane died. No more propane, empty. So in order to stay floating, he starts pouring air out of his mouth and blowing into the balloon. We all know how will that eventually end for this poor dude. So let's move on to the daily, and let's just deep dive into recent history. By the way, this is the current DXY chart on the daily time frame. This is what you need to see now, and this is the current top that we had at on September, on the 29th of September was the top of 2022, and ever since we had been in a downtrend, rallying a bit downtrend. But how did everything start? Or how did everything started? So everything started back in the first rate hike of 25 basis points at 17th of March. And as you notice, the first rate hike came right at this candle, this red wick, after 1, 2, 3, 4 days of sell off. Of course, we had a rally from here and then sell off, another rally, sell off. So at this point, we added a 0.25 or a 25 basis point. And that actually acted as a good enticer for the dollar, where it rallied for 1.5% the next next week, only to crash and then rally back up. So that was the first one, which has a decent mediocre impact. I mean, it has an okay-ish impact. And then of course, the more we add, the higher the rate hikes, the more it's tempting for people to hold the dollar because they get a higher interest rate. And of course, among many other economical, it's one of the economical tools for the federal government to suck liquidity from the economy, or to, the higher they go, the more they're sucking liquidity out of economy, the more it's harder to get credit and all of that. But to be technical on chart, I was curious to see the impact. So this was the second rate hike, which was a 50 basis point, and that caused a 2.5%, increase for the 8 days, 1 week. Next one, well, we have better results second time, right? So yeah, just the propane is like bursting propane into the hot air balloon, and then cutting off a bit, and then stalling. But on the 16th of June, government just pushed a 0.75% or a 75 basis points into the hot air balloon, and the hot air balloon kind of stalled sideways for 12 days, only then to impact and rally a 5.6% after this. Started to stall again, selling off, adding 0.75 basis points, 75 basis points or 0.75%. And the kept selling off here actually hit this support button or zone, and then rallied again, because now another 5.4%, because now we're like at the current moment, or back then, we were 1.5 plus 50, that's 2, plus 225, that we were at 2.25% interest. So the market did sell off for a couple of days, but then regained everything, made a new local high here, began to stall, pump again 0.75 here, and just give it the last burst of propane. Hot air balloon hit a 4.2% peak, and then did instantly sell off, started creating lower highs, lower lows, lower highs. And I mean, before we even get to this lower high, so here we were at a high, low, lower high, lower low, and then running all the way up. Let's pump it with a 0.75%. Oops, that was a lower high. So that's this 75% didn't impact like this 75%. And then massive sell-off, went deep down here. So 0.50 here, we did rally a bit, then rallied until this zone, and then a sell-off, even lower than we were here. 0.25 here at the very bottom. If you notice, this zone or this support is a multi-annual support zone, and losing this will bring us to a different era of the spectrum, the downside era of the spectrum. So this is one of the last standing supports. So at the very bottom here, 0.25% did boost, and again, those are accumulative, so we're adding up. And at this moment, we're at around 4.2% interest rate, and the price or the dollar did rally in strength. And let's boost it with another stimulus, like stimulate it with a 25 basis points here. So even with all of those 0.5 around here, we failed to break our zone of resistance. and then a massive sell-off. So we notice like ever since we peaked, which everything this peak is artificial. Everything about it is artificial and based on interests. You know, like if my pizza's bad and I'm trying to tempt you to eat it by paying you money, there is a point where you would say, I have enough money and I really don't want to eat this pizza. I want to go have something else with the money you paid me. So every time they added hikes, the dollar seems to be just going sideways or even trending down. Just like a man blowing in a hot air balloon trying to keep it afloat. So what is actually interesting is this last rate hike. And this is why or where I wanted to hit. This hit the nail in the coffin for me. This eventually speaks a lot. This candle today speaks volumes. So this candle, even when we had a downtrend, this candle after a rate hike, we had couple of green red candles, right? So yeah, we had a reaction. This rate hike here, we had a reaction. This rate hike here, we had a negative reaction. Today is minus 0.61%. This didn't help boost anything so far. So what I'm interested in today is, and for the next couple of days, this will be my main interest. This chart would be everything, because as we know, the dollar, everything in the market is versus the dollar. So if the dollar index is strong, all the assets are weaker against it. All the other currencies are weaker against it. So if you're trading fiat, euros versus dollars, yens versus dollars, yuans versus dollars, if this index is low, those gain against the dollar. If you're trading as a traditional market in the S&P 500, that's versus dollars. If this is low, markets are healthier or shows strength when this is weak. So they are inversely correlated. Again, in crypto, when this is weak, crypto is inversely correlated to the dollar. This rate hike, I mean, we just even did sell off even more right now. So at 0.62% negative today, did absolutely nothing. So what my interest now and for the next couple of days is, see this white line, this second here, and now we lost this channel, which was very important. This channel we traded in here until we broke out, retested, went up into this channel, into this zone, came back down, retested this upper parallel channel, came back here down into, accepted into our into this parallel channel. Notice how we traded within this, lost it here, got supported at this resistance, final boss, came back up, accepted, middle of the parallel channel, came wick down, again rejected at the middle of the parallel channel, and now we're trading below it. So we lost the parallel channel again. So my interest here is this supported us first time, supported us a second time. Here we didn't even reach it, but now we're trading between the parallel channel and this support zone or line. Will this be a triple bottom where we, by the way, triple bottoms is a very bullish formation if this bottom holds. Okay, but with this weak performance for the DXY ever since we started here, I mean, go on the weekly, I mean, this doesn't look as something strong ever since, yeah, 22nd of September, of 26th of September. So this has been looking weaker. This month here, it performed well until it just, it's selling off. So if this breaks on the bigger time frame, this is what we're looking at. This is the white line that top from this area of 2016 to the top from 2020. And yeah, and now we are testing it as a support. So if this fails, the dollar just goes into a free fall into the 90s zone, losing the 100 zone all the way down to 94. So we will be trading within this zone if this fails to support. So that will reflect positively on Bitcoin, which in brief, we are two parallel channels to end up this video for a Bitcoin update. Two parallel channels. Of course, since the dollar didn't sell or didn't explode in price, Bitcoin is standing strong, resilient currently, didn't lose its 28,000 level. So if you notice, ever since we were here, we have this purple parallel channel to the upside and this green parallel channel, okay, to the upside. Both are to the upside, but that is how they are moving. So from this wick here, right, from this very wick of 9th of November, we had this purple support where this parallel channel did actually, yeah, if you notice, did resist us here, support us here, okay. So, and again, resisted us here, supported us here, and resisted us here, and resisted us here. So this would be the purple, and supported us at this area, and supported us at this area. So this would be the purple. The green one, as you can see, this is the move for the green one. So again, we got supported here, and top of the channel, bottom of the channel, top of the channel, bottom of the channel, crash wick, accepted back in, and again, you can see how it moved from here forward. So here again, between this purple here to the upside, supported by the green, and supported by the purple, resisted by the green. So they have been playing catch those two parallel channels. Interesting to watch. And now if we can see that we are trading within our orange box, which the mass volume recently has been this orange box, and we can clearly see that this will act as a resistance and this will act as a support, creating this asymmetrical triangle, ascending asymmetrical triangle. And currently we are being resisted at the top, resisted by the top of our orange box, and supported by this white line, which acted as a very strong, resistance and support along our way. So here we are now. We are in this narrow corridor between all of those intersecting, okay? So if we move to this other parallel channel, we can see the double parallel channel. This has been acting again perfectly. So the green one is the same as the purple one from before. The 200, the 26,000 is the 200 weekly moving average, which will be acting as a very strong support, because this is on the daily. I marked it here. So if you notice again, yeah, I mean, this is self-explanatory at this point. We have been following this chart: resistance, support, okay, support here, resistance here, middle, support, resistance, okay, so you see, and again, we were supported here, middle resisted, came back down, retested, we are at the bottom of this parallel channel. So again, on this chart even, we are trading between this white line of 29,157 acting as a resistance and this parallel channel support zone, where if we draw this, we have an ascending triangle and we are trading within this ascending triangle. So the Bitcoin didn't, this is Bitcoin's candle today. This is it's like minus 39.39% on the day. So technically those rate hikes aren't affecting the markets much anymore. Their impact is more aggressive for banks and the economy. I mean, we all are seeing how banks are doing. It's just like it's negatively affecting the banks. Banks are collapsing, and with each collapse of a bank, we are seeing Bitcoin holding ground stronger, and conviction in being or fleeing towards and or into Bitcoin, the idea and the which was once a theory, is, and we're witnessing it happening, and people, and some of the people, of course, are adopting Bitcoin as an escape from the bad, dark reality we live in, called economy, banks, fractional reserve system. Yeah, I mean, and printing money. So that's everything for today. I hope was educational in any sort. I hope you enjoyed the show. I hope you love hot air balloons, but make sure to have propane always in them. If you like the content, you know what to do. Hit the like button, subscribe, and share this video with your friends. Leave me something in the comment below. I always read them and respond. With this, I end today's episode, and I'll see you tomorrow. Bye bye.